Hi, good evening, everyone. Welcome once more to the OBR EIC's monthly meetup via Zoom. My name is Tito Daflar, your co-host, along with Jenny Repko, and I'll be presenting a topic this evening that I find very important. Both of us are hard money lenders, and at the same time, we have identified other financial tools that our investor clients can utilize to help scale their business and their personal growth, their personal wealth. I've prepared 4 case studies for this evening that I'd like to share with you so that you can see how applying these strategies in an IUL can help you scale both your businesses, your real estate investment business, and your personal wealth. Okay, 1 second as I begin the presentation. First of all, I'll explain what is an IUL. An IUL is an index universal life, a type of permanent life insurance that builds cash value. The growth of this cash value is tied to a stock market index like the S&P 500, but it has a floor that protects it from market losses, typically 0%. It also has a cap on the maximum return. The infinity banking concept, becoming your own banker, is a strategy where you use a specially designed whole life or IUL policy as a personal banking system. You overfund the policy within the legal limits, build up a large cash value, and then you borrow against that cash value to finance purchases instead of taking traditional loans. You pay interest back to yourself into your policy instead of to a bank. Real estate investors are the perfect candidates for this strategy as they are constantly dealing with financing. Case study number 1 is called the Rapid Fire Flip Financer. The investor, Sarah, who focuses on fix and flip projects, her biggest bottleneck is not finding deals, but securing and closing short-term bridge loans quickly. Bank loans are slow and hard money lenders are expensive, sometimes 12% interest plus points. The problem is she finds a perfect off-market property needing $50,000 in rehab. She can flip it in 4 months for a 40,000 profit. She needs the capital now or she loses the deal. The IUL strategy, Sarah has been funding a properly structured IUL for 5 years. It now has a cash value of $180,000. She calls her insurance carrier and takes a policy loan of $50,000. The process takes days, not weeks. She uses the $50,000 to acquire and rehab the property. The loan has an interest rate of, let's say, 6%. This interest is paid back to the policy's general account. It's not paid to herself directly, but it strengthens the insurer, which benefits all policyholders, and crucially, her cash value continues to grow as if the loan never happened. 4 months later, she sells the property and pays off the $50,000 principal. The total cost of capital was just 6% interest for 4 months, less than $1,000, far less than a hard money loan. The enhancement, Sarah now has a reliable, on-demand source of capital to act fast. She can take on more projects per year, increasing her annual profit. Her IUL cash value continues to grow based on the full 180,000 compounding for her long-term wealth. Case number 2, the cash offer creator. The investor Mark, who buys and holds single-family rentals. In his competitive market, cash offers win 90% of the deals, but he doesn't always have 6 figures sitting in his checking account. The problem? A distressed seller lists a great rental property for $200,000. The market value is $250,000. The seller needs a quick guaranteed close. The IUL strategy, Mark's IUL has a cash value of $120,000. He also has $80,000 in other reserves. He takes a policy loan for the full 120,000 and combines it with his 80,000 to make a compelling all-cash offer of 200,000, which is accepted. He closes the deal in 10 days, beating all other financed offers. Immediately after closing, he secures a traditional long-term bank mortgage on the new rental property for 75% of its appraised value, 187,500. He uses the bank's loan proceeds to pay back the 120,000 policy loan in full. The renter's cash flow now covers the bank's mortgage. The enhancement, Mark uses his IUL as a strategic bridge to present as a cash buyer. This allowed him to acquire a deeply discounted property, increase his immediate equity, and secure better long-term financing. The policy loan was outstanding for only a few weeks, costing very little in interest. Case study number 3, the debt-free landlord. The investor, David, who has a portfolio of 10 rental units. He is tired of being at the mercy of banks for every new roof, HVAC system, or kitchen remodel. He wants to recapture the financing costs for his business expenses. The problem? 2 of his properties need new roofs simultaneously, costing $25,000. A bank HELOC would charge him 8% interest, and that money is gone forever. The IUL strategy. David's IUL has a significant cash value. 1. He takes a policy loan for the $25,000 to pay the roofing contractors. 2. He sets up a repayment plan for himself. Instead of paying $500 a month to a bank, he pays $500 a month back towards his policy loan. The interest portion of his payment goes to the insurance company, but the principal repayment goes back into his cash value, restoring his banking capacity. 3. The rental income from the properties easily covers the loan repayment. The enhancement, David has internalized a major business expense. He no longer pays interest to an external bank for capital improvements. He has created his own internal banking system for business maintenance and upgrades, dramatically reducing his lifetime cost of ownership and increasing his net cash flow. Case study number 4, the tax-efficient wealth builder. The investor Lisa, a high-income real estate developer. She is maxing out her tax advantage accounts but is looking for additional efficient ways to build wealth outside of her real estate deals. She is concerned about high tax liability on her earnings. The problem, Lisa has substantial annual profits that are being taxed at a high rate. She wants to create liquid, growing savings fund that she can access for future deals or retirement without creating a tax event. The IUL strategy, Lisa uses a portion of her post-tax income to fund a max-funded IUL. The cash value grows tax deferred. She can access the cash value via policy loans tax-free as loans are not considered taxable income. This creates a pool of capital that is completely separate from the volatility of real estate and the stock market. It has a 0% floor, protecting her principal. The enhancement? Lisa has built a powerful complementary wealth vehicle. It provides a safe, predictable, and tax-efficient store of value. This personal bank can fund future real estate down payments, act as a personal emergency fund for her business, or supplement her retirement income, all without increasing her tax burden. It diversifies her wealth and reduces her overall financial risk. The key takeaways for real estate investors are liquidity on demand. Your cash value is your line of credit available 24/7. Speed. Bypass the slow bureaucratic bank loan process. Cost efficiency. Often a lower cost of capital than hard money or credit cards. Control. You are the bank. You approve your own loan. Ladies and gentlemen, this is just a few examples of how you can apply the infinity banking strategy in an IUL as a real estate investor to grow and scale your business. If you would like more information or you want to structure a plan specifically designed for you to achieve your short, medium, and long-term financial objectives as a real estate investor or for personal reasons, feel free to contact me or be sure to contact me for more guidance on this topic. Free of cost, no obligation, but we'll be sure to design you the perfect plan for you. Thank you very much for joining me this evening, and we'll see each other again soon.